Hi there, welcome to Kneppy Invest. The end of the trading week is upon us. About 45 minutes to go as I record this video at about 3:23 p.m. local time, and a fairly bad day on the ASX. Everything is down by more than 1%. I'll touch upon why I think we did have a down day on the ASX, particularly when you compare us to what happened on the American markets overnight. Wasn't so bad there. And then I'll go through the top 5 announcements of the day. And the top 5 announcements in no particular order. I do try to rank these from my favorite to least favorite, but I couldn't really do that because I had no favorite. So those top 5 announcements include Cooper Energy, Fiducian, Cog Financials, Cosol, and Bale Financial Group. Most of these announcements are good, or the market did react favorably to them, particularly on a day like this. We also saw quite a few big mining companies release their quality activities report, including Pilbara, Gold Resources, Iluka, Whitehaven Coal, and Karoon. I might or might not touch upon those quarterlies. And then we also have seen a few other Appendix 4Cs or 5Bs being released today. And I might look at those, particularly if I do, look at Booktopia, which released their very first Appendix 4C. They haven't been doing it until now. And there were a few other announcements that did not quite make it into the top 5. And I might touch upon those, including Image Resources, Dropseat, and one or two others. Now onto the Australian market, and we are down big. Looks like all the indices and sectors are down, apart from maybe gold. Yes, gold is up. The gold indice up 0.74%, but all sectors are down, including energy, which does surprise me because I'll talk about oil in a second. I was a little bit surprised when I came back to my computer after being away from it after trading began, and I did see that oil had bounced. So I was expecting energy to be up, but energy is down. But it's still the best performing sector, only down 0.3%. Everything else is down a fair bit, by more than 1%, except for telecommunications and healthcare, IT, and financials, the worst performing sectors, down by more than 1.5%. And again, indice is the only indice that is in the green, up 0.74%. And I do have a few gold companies in my portfolios, so I'm happy to see that. Otherwise, everything is down, particularly small caps. Did look like small caps was worst performing among the top 5, or the 5 that are featured on market index up here, down 1.43%. So let's have a look to see if the small caps is the worst place to be today. Wouldn't be surprising. IT and financials are performing slightly worse than small ords. In fact, we also have the ASX 300 metals and mining and financials excluding REITs there as well. So mining not had a good day. Well, mining ex gold has not had a good day. Gold's had a good day. Real estate not a good day. Okay, so let's have a look to see what's caused a little bit of panic. Well, I won't say panic, but a little bit of negative sentiment in the Australian markets. And I came back to my computer maybe 15 minutes ago, and I went through quite a few of what's happening on the markets. Gold, I noticed, had rallied a little bit. That's why I thought, well, it's rallied and then come back. And that actually does make sense when I look at oil. So I saw that gold was up and it's come back a bit. But if you look at oil was not doing much until about, or just prior to 10 a.m. or 11 a.m. local time. So about 10:45 a.m., 10:50, we just saw oil just go on a massive tear. In fact, it went from about $82 a barrel to $85.60 in probably less than an hour. And usually when that happens, something has negative, something bad has happened in the world, particularly in the Middle East. And straight away I thought, Israel has attacked Iran. And that's exactly what has happened at that particular time. Israel has attacked Iran. This is pretty much official. So this is just through CNN. So for those who don't like CNN, maybe you can go to Fox News and do your thing. But CNN's a pretty good source of information on this sort of thing. And the world, or at least the Middle East, is on edge after the strike on Iran. And one of the reasons behind this, even though this seems like tit for tat, Iran did something not nice to Israel, even though it was pretty weak. I think, unfortunately for one girl, she did die. And then at this point in time, this doesn't look like a significant strike on Iran by Israel, but the foreign minister in Iran said something like, if you attack us, we're going to immediately attack you. So he said response would be immediate and at maximum level. Well, we're now 5 hours after this initial attack on Iran by Israel. And what are you going to do, Iran? So that's what the world is waiting for. And I think the world and the investing community is just a little bit concerned that this could escalate a little bit more. Now, Australia has told Australians that are living in or in holidaying in Israel to get out. They're probably doing the same thing for Iran. So I think most countries will be doing that as well. They're just concerned that this will escalate into something that we don't want, and that is maybe an all-out war. We just don't want that. And that's why the market is down, in my opinion. Now, way to see that is if you go to the XJO and just have a look at the 5-minute chart, did we see a significant plunge? No. So the plunge began straight on opening, which is before this strike. And then the market went all the way down to below 7,500. So we have seen a little bit of bounce. So one point in the day, just after midday, looks like the SGO was down about 1.8%. So there's a little bit of rally during the last half of the day. So that is what has happened. And what has caused a little bit of negative sentiment in the Australian markets today is just the little bit of hostilities in the Middle East. Whether that's going to continue over the next few days, I wouldn't be surprised. And I forgot to show you that the pre-markets, the pre-markets were down big in the United States. Dow Jones was down about 500 points on the news of these strikes. It has rallied a little bit. NASDAQ was down about 1%. So I wouldn't be surprised to see a negative day on the American markets. But just because they have a negative day doesn't mean we'll have a negative day on Monday, because we have had the reaction today. And if we say no further strikes from Iran towards Israel, perhaps this is the end. Just don't know. And if this is, then maybe we'll have a pretty good day on the Australian markets on Monday. Just saying, possibly. In response to all this, I have gone more to cash. So I've sold out some of my trading positions because share price has fallen below my sell point. Taken profits in A2 Milk. What else did I sell? Took profits in A2 Milk and slight losses in ANZ. And I also sold out something else. Slight loss in Dicker Data as well. I was thinking of selling of Treasury Wine Estates position, but I gave that little bit of time, more time to play out. Anyway, let's have a look at the best announcements of the day, or the announcements of the day. Starting off with Cooper Energy. In fact, Cooper Energy was the first announcement of the day. Let's have a look at that. So just have a look at ComSec. Just having to see if there's there's Bill Financial. There it is. No, sorry, Pilbara Barrels. You were the first announcement of the day, but Cooper Energy was a second announcement of the day. This was a guidance update, and I'm going to see if the share price has gone up. It should have gone up because energy was good today. This is an energy company, and this was an upgrade, production upgrade, and the share price is up, but not as much as I thought it might have been. So this was an upgrade, a production upgrade. More than likely also a profit upgrade. This is exactly what you want to see. So we'll have a look at the chart later, and the chart actually looks pretty good. Okay, so in fact, I do have a table here. Here it is. This is what you want to look at. In fact, I did not tweet about this. I should have tweeted this. This is a pretty good tweet. So production upgrade from 58.5 to 65.2 TJED, whatever that is, up to 60.5 to 64. So the bottom end of the range, the guidance has been upgraded. The top has not been upgraded, but production expenses has been decreased from between 60 to 68 and now between 57 and 63. So there is a chance with oil prices up a little bit that this will be a good half or quarter for Cooper Energy. Financial year, in fact, for Cooper Energy. So let's have a look at the chart. So probably a weak production upgrade because the top end of the upgrade has not been lifted, but the bottom end has been. So they're a little bit more optimistic about the financial performance of the company. So in that respect, it is an upgrade. Okay, let's have a look at the chart, and the chart looks pretty good. This is the 5-minute chart. We don't look at the 5-minute chart. So Cooper Energy was in a well-defined downtrend between September 2022 all the way through to the end of 2023. Share price falling from 26 cents down to a low of just less than 10 cents. But tide has turned for Cooper Energy. Share price in an uptrend, a nice higher high. and hopefully we will see a higher low. So things are moving in the right direction for Cooper Energy. Share price and the valuation of the company has doubled in the past 2 months. Share price in January was 11 cents. Now it's 21.5 cents, has been as high as 23 cents. So a nice production upgrade from the company. Chart looks pretty good. So have a look at the weekly chart. You might get a different perspective if you look at this. Share price high for this company over the past few years, we'll say 5 years, has been 60 cents back in 2019. Nice little resistance area. You just put it here, look in the weekly chart, around that level. In fact, I'm just going to change that to a dashed line. So a dashed line is resistance and support. A dotted line is my stop loss. I don't use stop losses, but it's my own stop loss. That's how I look at, or I see if any of my companies are a stop loss, is just by a dotted line. Anyway, so a bit of resistance at about 30 cents, but that's still about 33% from where the share price is now. Maybe 40% from where the share price is now. So everything looking good for Cooper Energy, one of the companies, or one of the top announcements of the day. Now on to Fiducian. I'm hoping share price is up. Yep, up 5.3%. In fact, this is not a surprise. So a pretty good day for Fiducian, and maybe this should be the announcement of the day. Now, that's me not knowing how the other 3 companies has performed, although I do think, assume one of the share prices of these companies, in fact, the next company I'm going to look at, is down. So what has caused a rally in Fiducian Group? They released their Appendix 4C. Now, this is a voluntary Appendix 4C. The only company that does it, I think. Clinivel used to do a voluntary Appendix 4C. Now, Fiducian doesn't release Appendix 4C every single quarter. It's voluntary, and they release it alternately with the half-year and full-year reports. So last quarter, they didn't release Appendix 4C. Instead, they released the half-year report. Now they've released it quarterly. Next financial report we're going to see from the company is the full-year report, unless it's a half-year report. And we can confirm that right now. Yeah, it'll be a full-year report in August. So you can see Appendix 4C in April, in January, they didn't release any announcements. So you only get 2 Appendix 4Cs from Fiducian every single year. Anyway, so the market liked it. I liked it. I am a long-term shareholder of this company. I find it interesting that many analysts have never heard of this company, which is interesting. It's weird for me. Anyway, so this, again, is they've actually mentioned here, voluntary lodgement of Appendix 4C. Everything's moving in the right direction. So if you just have a look at the cash flows from operating activities, receipts 21.6 million, operating cash flow positive 4.7 million. For the first 9 months of the year, 13.1 million. The company is not valued that high. So let's have a look. Fiducian. So what was that? $13 million of cash flow for the year so far. So we could assume about $17, $18 million for the whole year, and the market cap of this company is only 253 million. So the company's trading on about, we'll say about 12 to 13 times free cash flow. That's fairly low in my opinion. I think there is an argument that Fiducian is pretty good value. Now, one of the reasons I do own this company is because they're growing and they have a nice dividend yield. So I'm hoping I can maintain a holding in this company for the long term. That dividend yield, based off my initial capital investment in this company, will grow to well over 20%. This is a long-term hold for me. I have no inclination to sell this company at all. The other thing they do is, or they mention here, is funds under management, that sort of thing. So inflows to their core financial platform is up. Funds under management, administration advice, up to 13.7 billion, an increase of 1.4 billion from this time last year. So let's have a look at the chart for Fiducian, and definitely this company share price is in an uptrend. I knew that because I'm a shareholder, and I was thinking of taking a trading position in this company. I probably should have, because it broke out on the release of their half-year report. This was one of the reports that I completely missed. And when the share price is up 5%, when the overall market is down over 1%, you're always going to take that. And based off this Appendix 4C, you can actually say and argue this is another breakout. And I completely missed it. I even missed this little pullback. Anyway, so that's the daily chart. Weekly chart looks pretty good. Nothing complaining here. If you go all the way back to when this company listed on the ASX back in 2015, a beautiful uptrend, a little bit of weakness for about 2 years between 2021 and the end of 2023, and the company just became cheaper during that point. It was a great buying opportunity. So yeah, a company I have in my portfolio, and I hope to have in my portfolio for a long time. Anyway, Fiducian. Another top announcement of the day. Now on to announcement. I think the share price will have gone down. COG Financial Services down 8.2%. Not surprising. So they did release their third quarter results. This is not an Appendix 4C. This company is profitable, generating cash flow, that sort of thing. But they did release this little update talking about NPATA. So I'm pretty sure that's net profit after tax and before appreciation. Let's confirm that. Where's note 1? Oh, there is. Underlying net profit after tax and before amortization of acquired intangibles and write-off of intangibles. Whether that's a good thing or not, I don't know. I am not an accountant. So what we're looking at here is a comparison between this quarter and the third quarter of financial year 23. So quarter on quarter, not really quarter on quarter, year on year, and then the year to date. So we are comparing like for like. I like to compare quarter to last year's quarter because of the possibility of seasonality. And yeah, and if we do compare the total NPATA from last year to this year, it's gone down from 5.8 million to 5.4 million, although year to date is up from 16.9 million to 18 million. So I just thought the very fact that the third quarter NPATA is down from last year, I thought the market would react negatively to it, and it has, down 8%. So I'm not surprised with this market reaction, and coupled together with the negative reaction in the overall market, definitely see COG Financial. Let's have a look at the daily chart first. And this looks, not a good looking chart. Nice bounce today, however. So when the share price got down to about $1.16, there was enough support because the share price rallied the last time it got down to these levels back in November of last year. So possibly those who saw the share price rally back then have seen the opportunity maybe to buy some shares in this company at those levels. But otherwise, the chart looks doesn't look that good. I'd like to see how the market reacts the next few days. If we see continued selling, share price could fall below $1.12, and that would be a negative thing for this company. And look at the weekly chart. A nice rally from the bottom of the COVID-19 financial panic to the highs back in 2022. That was a really nice rally, but that rally has come to an end. You can see over the past 8 years, 9 years, in fact, this chart goes back, no significant uptrend in the share price. So this is not a chart of a high quality company. Fiducian was. This is not the chart of a high quality company. In fact, share price hasn't done much since 2015. Back in 2015, share price was just below $1. Now it's $1.20 or so. $1.22.5. Okay, so not surprising with COG Financial Group and the reaction from the market there. Now on to another company I own. In fact, 3 of these companies I do own. So Cosol. Cosol, I do have this in my trading portfolio, up 1.5%. I will take that. Up by, so it's in my trading portfolio. And I'm thinking, should this be in my trading portfolio? I have quite a few small cap companies in my trading portfolio. More than likely, I won't sell them unless I see something really negative in the business. And this is one of those companies. So they've made an acquisition. In fact, I like this acquisition. Now, maybe I'm biased because I do own this company. I like the potential of this company moving forward. And this will be EPS accretive according to the management. I always cringe when I see that because I know there is a possibility that this acquisition will not be good for the company. A possibility. So they're paying 6.1 million, no capital raising with this, so that's a positive, but they will pay the vendor approximately $2.9 million in cash and a further 2.5 million in Cosol shares. So a little bit of dilution to the shareholders, but the price of those shares to the vendor at 98 cents or just above 98 cents. A further earnout consideration of 700,000 is payable to the vendor subject to EBITDA performance hurdles, which is okay. Now, they did mention here, Cosol management have stated, it is anticipated, so it's a key word there, anticipate, doesn't mean it will happen, that core asset, this is the acquisition they've made, will contribute approximately $6 million in revenue and approximately $1.6 million in EBITDA in financial year 25. Pretty sure they mentioned something like EPS accretive somewhere in here. Surely they did. Surely they did. I'm pretty sure they did. Oh, there, it's right there. It's the fourth. Yeah, it's right there. It's a fourth highlight. Immediately, earnings per share accretive. Okay, so I like that particular announcement for Cosol. A nice little reaction, sort of a mutual reaction. If the market was up 1.1% today, I think Cosol share price would have rallied 5 to 10%. That's just my thinking. And the share price on the chart for Cosol looks pretty good. So this is the weekly chart, daily chart. It's a nice uptrend. This is my favorite sort of uptrend. It's a gradual uptrend. Share price broke out, and just after it broke out, I bought some shares in this company. But following this company just after it listed on the ASX. Back in 2019. I thought it was 2020. Oh, that's right. This company listed on the ASX just before COVID-19, and then it dove straight away, and then a beautiful rally in the share price. How that share price then went sideways for a while in 2020, 2021. But if you look at the weekly chart looks pretty good. So this is exactly what you want to see for a company that's listed on the ASX. It's gone from the bottom left to the top right, and the share price is not at an all-time high. That was reached a few weeks ago, in fact, in February. But yeah, nice looking chart, a nice gradual rise, a little bit of volatility in there. And we do have this in my trading portfolio, and my reasoning is if the share price falls below 90 cents, that would be a sell because something negative has happened to the company. Good volume has come in today. That's another good sign. Some good volume has come in. Okay, so Cosol coming in at the fourth announcement of the day, or one of the top announcements of the day. Next coming in line is Bell Financial Group, and share price flat. A little bit surprising because they did release a trading update. Now, they initially released that trading update in the AGM results or the presentation, and then they released a separate announcement. So it's interesting. Possibly they were told to do it because I saw this information first in the presentation. And whenever I see an AGM, I don't care about what they talk about, how they performed in last year. The only thing I care about when a company has an AGM is a trading update. Most companies do release a trading update in the AGM because the AGM is a few months after the end of the financial year. So the management should know how the company is performing. So they go through this whole presentation, how they performed last year, went straight past all that. I don't care. Don't care. And here's the most important thing. And it's right at the end. In fact, I think, this is the most important thing, yet it's found right at the end. Now, page 14. So first quarter update. Revenue, 62 million, up 17.4%. Profit before tax, 9.3 million, up 60%. Funds under advice, up 3.4%. So they've also mentioned here a strong start to the year. So that's true. Strong start to the year. And the first quarter trading update, if it opens up, probably has the same information. Yeah, same information there, although they left out funds under advice because revenue and profit before tax looks pretty good, increasing 17.4% and 60%. And the CEO or the co-CEOs, that's one thing I don't like, the positive momentum, because it says here, commenting on the performance, the co-CEOs said. So did they say this in unison? I'm not a big fan. Who likes The Office? There was a time when Michael and Jim were co-managers or co-managers of The Office, and it just doesn't work. You need one leader. That's all you need, one leader. Anyway, not a big fan of co-CEOs, but I'm still a shareholder of this company. Anyway, they said the positive momentum we saw in the final quarter of 2023 has carried into 2024, giving us a strong start to the year, etc., etc. So let's have a look at the chart. And just like Cosol, I do have a point where I will sell out of this company if the share price falls to that level. And that point is this. There is the dotted line. Could also say that's support. So you can see on 3 days, it did fall below that level in March, but I did not sell because my stop loss is not if the share price falls to that level, I immediately sell. It's if at the end of the day it falls below that level. And sometimes I give the company a few days to see if it can go back up because I don't want to sell on a false break. And you can see a lot of buying came in on those 3 days when the share price fell below $1.27. That's why I put it at that level. So share price hasn't been going sideways, but the share price is in an uptrend after a long period when the share price was in a downtrend. So even this chart looks better. And I think if they continue this momentum, the share price will get back up to about $2. I'm pretty sure share price has been $2 in the past. Yep. Yeah. Well, almost. Yeah, it got to $2 back in 2021. So I think the share price will go back into an uptrend from here. So that's our financial group. What else do I talk about? So Karoon released their down 4. Oh, the market doesn't like this. So they released their quarterly report today. So obviously the market didn't like it based off that and the very fact that oil prices have risen today. So let's have a look at Karoon. Is this a time to get excited about this company? Probably not. Share price has been volatile. So a fair bit of volatility in Karoon today. So up and down. This is a 5-minute chart. So initially down a fair bit, went all the way down. Oh, look at that rally. This rally in Karoon's price, share price today, was on the back. It started, what time? Just before 11 a.m. So this little rally in Karoon was because of Israel and Iran, and now the share price has pulled back and now down about, according to this, 5%, but that's 20 minutes delayed. So I just want to look at this 5-minute chart, fairly negative, and the market didn't like this at all. And this is coming out of a nice little rally in share price of Karoon. Probably my favorite oil company on the ASX, to be honest with you. Were Pilbara Minerals also released a quarterly activity report. I think it's what it's called. Yep, quarterly activity report. Share price down 2%. They did. The one thing I remember from this one is the cash on hand did fall by 300 million from 2.1 billion to 1.8 billion, but that's nothing to be concerned with because I might have spent a fair bit of money in capital expenditure. But I would say that this is probably one of the, if not the lithium company to be following. So when we do see it, and if we do see a bounce in lithium, this is my initial play. This would be my play, first play with lithium. But at this point in time, nothing too exciting when it comes to Pilbara Minerals chart. And the other companies that released activity reports today, Gold Road down 1.23%. Iluka, which is mineral sands, if I remember correctly, down 3%. So let's have a look at this chart. I think mineral sands has been weak over the past 6 months or so. And you can definitely see the share price in a downtrend. That's when it was weak. And I think the share price of Iluka is leveling off now. So not quite breaking out, but eventually one to have in a watch list, I think. And then Whitehaven Coal. So up a little bit, and Whitehaven Coal has, the chart has been all over the place. Up and down a fair bit. Look at that. Fair bit of volatility, but generally flat. So if you take away the volatility, share price really doing nothing. And the way to take away the volatility is just look at the moving average channel, particularly the long-term moving average channel is just going sideways. Just going sideways. And that's a sort of a telltale sign the share price of this company is going sideways. Bit of volatility in there, but you could even say trading in a channel. And you want to see a breakout of that channel. It has not broken out of that channel just yet. A few other Appendix 4Cs and 5Bs that I want to mention today or look at. First one is JPR, Jupiter Energy. Share price flat, but I open up their Appendix 5B, and this is all what I do for every single company that releases these reports. Company is operating cash flow positive by a fairly big amount, $1.8 million in the quarter. For the first 9 months of the year, operating cash flow positive by $2.6 million. Now, not much receipts, so this is not a big company, but still the company is operating cash flow positive. They paid back some loans, so that's very important. What does a company do with their operating cash flow? Do they do more development? Not much. Property, plant, and equipment, $15,000, so not much capital expenditure. Nothing in regards to mines or anything like that, exploration. So they decided, I'm going to repay some, or we're going to repay some debt. And the cash on hand at the end of the quarter, even after they've repaid $1 million of debt, is at $2 million. And how much debt do they have? Still 7.6 million. No, unused. So they have no debt. They've repaid their debt according to this. Possibly an interesting company. Now, I don't know anything about Jupiter Energy. They did release the activity report. So have a look at that if this is piquing your interest. So let's have a look at the chart for this company. I have never explored this company. This is why I go through this process to possibly find these small companies that no one likes. And it looks like, based off the chart, no one likes this company. Share price not doing much. Look at the weekly chart. Share price not been doing much over the past 4 or 5 years. There was a time back in 2020 when the share price went off. Share price in 1 week went up 3,650%, and then the next week was down 78%. Anyway, So this is a company to explore further. Another company we have is Locality Planning Energy. Now, there is a takeover bid for this company, but I think the management said no, this takeover bid undervalues the company. And the company says they are operating cash flow positive or cash flow positive, I'm pretty sure they said. So LPE continues to be cash flow positive year to date through the end of the quarter. Okay, I read that a little bit wrong because when I looked at the Appendix 4C, I went, no, they're not. The operating cash flow negative by 774,000 for this particular quarter. You can see receipts of customers 9.9 million, product manufacturing operating costs 9.2 million. Very small margins in this company. But if you look at the year to date, they were operating cash flow positive by 5.9 million or almost 6 million. But there was another cash flow of 13.2 million. What is that? Because look at product manufacturing operating costs were greater than receipts by nearly $1.3 million. So straight away, I look at this particular Appendix 4C, particularly cash flows from operating activities, and I have no interest in this company because of really low margins. What does the market think? They could think differently than me. The share price is, I think this rally in the share price was a takeover bid. This 40% increase on 16th of April. But other than that, the share price looks ugly and has looked ugly for many, many years. So no interest in Locality Planning Energy. Now on to EGY, a company I know nothing about, Energy Technologies. So this probably would be a company, not much growth in cash receipts, but I think it is growing a little bit. Receipts of 4.1 million and operating cash flow negative by $407,000. But for the year to date, they were operating cash flow negative by 4.5 million. So things have improved for this company. So without doubt, costs have come down because receipts aren't growing, and the way to decrease operating cash outflow without increasing receipts is to decrease spending. And it looks like they have done that based off these numbers, particularly product manufacturing and operating cash. I have no idea what this company does, to be honest with you. So let's have a look. About Energy Technologies has 100% ownership of Back Wires and Cables, a manufacturer of low voltage copper insulated cables. Okay, this company has nothing, is doing nothing in what I thought it would be doing. I thought Energy Technologies would probably be some sort of mining company. And here is the quarterly cash receipts. So I just mentioned not much happening there. It's virtually flat. This is the last 4 years, so no significant growth. And it does look like it's hard to read this because you look at first quarters, third quarters, so good growth in fourth quarters the last 3 years. But there has been a general increase in cash receipts over the last 4 years. It's just the way they've done this particular graph. They've put the quarters in one column. So the first quarters, second quarters, third quarters, and fourth quarters. I think it should be done by year, so you can just see the growth. But there is growth there. So possibly a company to put on your watch list. I'm interested to see what they're doing, but not quite there yet. On the cusp. And let's have a look at the chart. Oh, no, nothing to like here. Nothing to like with EGY, Energy Technologies. I'd like to see the share price at least in an uptrend and a little bit of interest in the company, but nothing there at all. And Booktopia, their very first Appendix 4C, down, not a surprise. Okay, I'll talk about why it's not a surprise in a second as we open it up. So this company has been troubled. Not in trouble, but has been troubled. Share price has dropped a lot from about $4 all the way down to, what was it, 7 cents? And I get a lot of information about this company just by looking at their Appendix 4C. And I'll say why. Okay, so receipts of customers, 46.7 million. That's a fair bit of receipts, a lot of receipts, but barely operating cash flow positive, 781,000. So the margins in this company are almost non-existent, and they'll have to think of ways to improve that. Intellectual property, 479,000. Seems like that's an ongoing cost. No capital expenditure, $15,000 in that, but for the year to date, 5.7 million. So even though not much capital expenditure this particular quarter, for the last 9 months, they have spent a fair bit, which means this company in the last 9 months is not free cash flow positive. In this quarter, they were. Other things to pay note to, proceeds from borrowings, they've increased the debt based off this by 400,000, and they also include leases and interest. So they paid $1.8 million in leases and interest. So if you include that into the cash flow, this company is definitely not cash flow positive. In fact, they're burning through a fair bit of cash. Okay, cash on hand, 1.6 million at the start of the quarter, 212,000 at the end of the quarter. Now, that's not necessarily a bad thing if they have financing facilities, that sort of thing. If they can cover that low cash levels with finances. They have $10.984 million in total financing facilities and unused financing facilities of 959,000. So a fair bit of debt, interest rates at 10% per annum in one of them, 14% in the other one, 10% in another one, 4.5% at Advest and Commonwealth Bank. They have a credit card there, and probably interest rates in that is about 5,000%. Okay, so a few really big red flags when it comes to this company: a low amount of cash, a bit of debt, and not much unused financing facilities, and they're still burning through cash. And they also mentioned in the comment section, things are weak. So trading is substantially in line with the forecast for the quarter, though conditions continue to remain challenging due to economic headwinds and the continued soft performance of the Australian book market. They also blame students. The academic season for tertiary education saw students continuing to make cost-conscious decisions around their study and learning materials, impacting performance in this category. Anyway, so troubled times for Booktopia. There is potential that Booktopia won't be on the ASX in the next year or so if they don't get a control of their cash burn. And Flexiroam, up 12.5% at the start of trading today. Share price was up over 30%. So share price went to a high of 3.5 cents. And this wasn't okay. This was actually pretty good, Appendix 4C. Now, not much growth in receipts from the previous quarter, 3.8 to 3.5 million, if I remember correctly. Or maybe it was up 3.5 to 3.8. Anyway, but the main thing here is the company is operating cash flow positive. This is a true operating cash flow positive, free cash flow positive as well. So we should see the cash on hand increase from 760,000 to 2.5 million. So, or they did a capital raising or something, $1.5 million in that. So increase in cash on hand. Things are moving well for this company. Fairly bullish also. The highlights here: revenue increased 44% year on year. Cash receipts increased 25% year on year. I do like to look at the previous corresponding period, not the previous quarter. Gross margins improved 100% year on year, driven by growth in revenue and significant reductions in data costs. So one of the reasons why this company is looking better is because of a decrease in cost. But I'd like to see an increase in receipts and revenue. Looks like they are doing that slowly. So definitely a company to put on your watch list, but let's have a look at the chart. Maybe not, because we did see a bit of selling today. And you can see why we saw a bit of selling. Share price in a downtrend, and when the share price got to 3.5 cents, we heard all these shareholders who'd bought at high prices had the opportunity to sell out. High volume coming through today, but that's just given the shareholders, or the ex-shareholders now, just the opportunity to sell out of this company. And share price back down to 2.7, and still no breakout for Flexiroam. A few other companies that did release announcements today. I won't have a look at charts, so this video is going on a little bit longer. IIQ, I did notice the share price of this company was down a fair bit. Yeah, 15.63%. Ovarian cancer test validation. So that must have been a negative for IIQ. The reason I took a look at this was because there was a Facebook post probably hinting this was going to be really good, but it was the opposite of it. And, well, it started off good. Share price actually opened up higher. Share price opened at 67 cents. Yesterday, the share price closed at 64 cents. So on open, the share price did increase, but sometimes it's not good to buy on open. And this chart doesn't, nothing at all doing anything. This chart is doing nothing for me at all. Nothing. No trend. Another company that released something today, Image Resources. So they did a pre-visibility, so strong feasibility results. Share price opened at 11 cents and now down to 9.4, actually down 6%. So a little bit of selling came in. In fact, there was a dump on market. You can see all these bids now, sell bids. And the whole reason for that, if you go, I had a look at this, whole reason, because I was unsure why, at 248 and 41 seconds, with fair bit of buys at 10 cents. Someone just dumped on the market, and the share price went all the way down to 9.3 cents fairly quickly. So it really would have triggered a lot of, there it is, 284. In fact, they dumped on market to send the share price down to 9.3 cents. And that's why we have seen weakness in this company, because of one person just dumping on market. That can happen. And then all these people who put bids in, sell bids in, below 10 cents are just panicking. That's what it is. They're just panicking. They think something's negative has happened to the company. Not quite so. Anyway, so that's Image Resources. And then we have Dropsuite. They're doing it. Oh, share price down a fair bit today, which is interesting. They released an announcement yesterday, which I almost had in my announcements of the day, the 18th. Yeah, yesterday. Quarterly business update. Did not quite make it. Share price actually did increase, I think. No, it decreased 3.3%. And they released an announcement. They're saying they're consolidating shares. So it's a 10-to-1 split, which means instead of 660 million shares, they're going to have 66 million shares. So the share price will be $2.75 if they do it right now. And finally, possibly the best performing company today might be DY6 Metals, maybe not. So let's have a look at the best performing company today. Let's have a look at the top gainers. I haven't done this. Argent Minerals, magnetic, not a lot of what do you call it, turnover. So I'm not going to even look at DY6 because not a lot of turnover there. Is there any other company on this list? Sky Network Television had a nice day. Fiducian's there, AIC Mines, Centuris, which I'm pretty sure is nickel, closed the gloop. Credit Clear is there, so nothing significant. There's SciDev, another good day for that company. The stock of the day yesterday, and another good day, up 6%. And the top losers, Tiny Beans down 32% on $41 worth of shares traded. No point looking at that. And by market cap, whoops, Imagine, Ioneer, Step One down 8%. What's happening there? Dropsuite, Next Science, Mitchell Services had a really good day yesterday, bad day today, and Prophecy. So nothing there. Although Step One, I want to look at Step One. So they've had a few really down days and big down days in a row. Not yesterday, but and it's right on my sell point, $1.61. This could be a sell. So Step One's starting to look weak, and we have had a few days now in the past month where we've had in fact, 4 big down days in the last month. Now we've also had rallies during that period, but that's just telling me that the market's just selling off of Step One, maybe taking profits, but very close to my sell point, Step One. And I think that's all I have for today's video. In fact, I'm just going to look at ZIP very quickly. Is it below $1.10? Yes, ZIP is below $1.10. So I just have a look at ZIP. I keep looking at ZIP chart. And is there any reason to get excited about ZIP? So 4 big down days in a row. Let's have a look at the 5-minute chart just to see. And yeah, 5-minute chart still looks pretty weak. No reason to even be day trading ZIP right now, unless you're short selling it or something like that. Anyway, that's all I've got for today's video. If you have any comments, any thoughts, leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.